What am I doing differently today to avoid paying taxes tomorrow? Same principle. That's why you have tax strategists, right? What are you doing today to position yourself to pay less taxes tomorrow? If you do nothing, guess what? Uncle Sam will gladly take your money. He does not care about you, right? So you have to take control of your life, whether it comes to your health, whether it comes to your businesses, whether it comes to your taxes, right? So beautiful. So next week is going to be crazy. We are going to talk about Schedule C. Now, this is going to be explosive. You need to invite all your friends. Anybody you know who is a business owner, who has an LLC, they need to attend next next week's session, right? Now I get excited talking about taxes. I love it, right? So I'll be on vacation next weekend, but I'm going to do you guys a favor. I would endeavor to have a live. We're going to talk about Schedule C next week. It's going to be crazy. You have to attend it with your friends. We're going to talk about businesses. We're going to talk about Schedule C. We're going to talk about tax write-offs. But we're going to do a quick overview, right? And welcome Miami Travel Nurse. Welcome Fabiola, right? Yes. So today we are going to talk about Schedule B. Schedule B. And then next week we're going to talk about Schedule C. I get excited about these things. It's going to be a journey, guys. It's going to be a journey. So the first thing to understand is what is Schedule B. So Schedule B is basically a form that you have to complete if you received interest and ordinary dividends, right? So which means that what? If you did not receive interest and dividends, you do not need to complete Schedule B, right? Now, so let's go. What is interest, right? So you can receive interest from a financial institution, right? Like a bank, like a now people have, okay, let me give you guys a secret, right? Let me just give you guys, those who are attending now, let me give you guys a trick. Don't just put your money in a basic savings account. Do not put your money in a basic savings account. You are wasting your time. Why? Because according to the rule of 72, the average basic savings account gives about 0.08%, right? So if you divide 72 by 0.08, it tells you that your money is going to double in over 900 years. Just do the math. That's why you never want to put your money in a basic savings account, right? Now, this is my recommendation for those who are attending. Do yourself a favor. Welcome, Independent Queen Shot. Do yourself a favor. Put your money in a high yield savings account. Now, there are so many high yield savings accounts that are giving 5%, right? And your money is going to double quicker, right? Now, when you put your money in a savings account or in a brokerage account and you get dividends or interest, right? The interest or the dividend needs to be reported on a Schedule B. That's the purpose of a Schedule B, right? From Schedule B. So generally, a tax preparer would do that for you, right? Now, so there are three parts. If you look at the Schedule B form, it has three parts, right? The first part is about interest. And then the second part is about ordinary dividends. And then the third part of the form is basically about foreign accounts and trusts, right? So now we are going to break down each of those sections. Welcome, if I've not wished you welcome, right? So we're going to delve into each of the different parts of the Schedule B. So you have part 1, part 2, and part 3, right? So part 1, like I said, is interest. So now don't get me wrong. The interest that you get from your Form 1098, last week we covered Schedule A. Schedule A was about itemized deductions, right? Today we're talking about Schedule B, interest and dividends. Next week we're going to talk about Schedule C, which is business owners. This is going to be crazy. It's going to transform your life. It's all about taxes. if you don't position yourself strategically to pay less taxes, Uncle Sam is going to take your money. That's just a fact, unfortunately. Uncle Sam does not care about you, right? So welcome, Talk, right? So we're going to continue. So on part 1 of Schedule B, you have to report interest, right? So let's say you got interest of $100 from Ameritrade, from a brokerage account, or Robinhood, or whatever the case may be. That's going to go on part 1 of your Schedule B. It's going to be reported there, right? Now, there's really nothing you can do about it, right? You just have to report it. Now, there are other elements. I'm going to try to simplify it. There are other elements of interest that could go there, because there are different variations of interest, there are different types of interest. But the most important thing is that you are going to get what we call a Form 1099 INT, which is short form for interest. Form 1099 INT. So that tells you the interest that you received and all the tax implications and all this kind of stuff, right? So now let's go straight to, I don't want to complicate things. I just want to make things as simple as possible, because it can become quite complex, right? Now let's look at part 2 of the Schedule B, right? Now, before I forget, next week's session, we're going to talk about welcome, right? Yes. So next week's session, we're going to talk about Schedule C, which is for business owners and LLCs. Now, this is going to be explosive. You don't want to miss next week's session, right? You have to attend. You have to invite all your friends, right? Shanae, welcome, right? It's going to be crazy, right? Hi, everyone. Hi, everyone. Right? It's crazy. You know, at times I struggle. Let me see here. Right? So let's see here. Let me see. I'm trying to make out some of these names, right? Let's see here. Let me see who else is joining here. Right? Right. If you know, at times it's tricky when you have all the Instagram whatever. So let's continue, guys. Sorry again, welcome to everybody. So next week we're going to talk about Schedule C. Invite all your friends. If you are an aspiring business owner, if you plan to start a business, if you are a seasoned business owner, you need to attend next week's session, because we're going to talk about Schedule C and LLCs, right? We're going to have a quick overview and talk about a couple of tax tax write-offs and things like that. So that's for next week. But for today, let's focus on Schedule B. Right? I get excited talking about taxes. So, right. So, part 2 of Schedule B is ordinary dividends. So, basically, what are dividends? Dividends are issued to stockholders, right? So, if you are a shareholder of a company, if you hold stocks from a company, whether it's Apple, whether it's Samsung, whether it's Microsoft, whatever the case may be, and you get returns from your shareholding, and these are called dividends, right? Now, if you have a business, for example, if you are a C corporation, right, you can get C corporations, yes, so you can get dividends from your corporation. But again, people always talk about the issue of double taxation when it comes to corporations, right? Krista, welcome. Why not kick welcome, right? So you have to be careful with corporations. But again, these are other things we are going to talk about down the line. We are going to talk about advanced tax strategies at some point. But I'm taking everyone on a journey, on a tax journey, so that you can understand those basic things that everybody needs to understand. The government does not care about you. The government, if you don't understand these things for yourself, you are just doing yourself a disfavor, right? So those are the things that we call dividends. Dividends, like I said, if you are a stockholder, or if you are a shareholder, right, you own stock from a company, then you are entitled to get dividends, right? So when you have stock, they are going to give you a Form 1099 DIV. It's a short form for dividends. Form 1099 DIV. You need to make sure that if you have like a brokerage account, then you're more likely going to. So if you have a brokerage account, you're more likely going to get a Form 1099 INT, which is interest, right? Or you are going to get a Form 1099 DIV, which is dividends, right? Now, all these are taxable, right? Nothing is tax. Well, these things are taxable portfolios, but there are other portfolios which we can talk about. These are taxable. These are advanced tax strategies, but today we're not talking about advanced tax strategies, right? So now we've covered, I'm just trying to make things simple for everybody, right? So we've looked at ordinary dividends. In a nutshell, these are what we call dividends. You are going to get them from your brokerage firm, whether it's Robinhood, whether it's TD Ameritrade, and all those companies, right? You have so many of them. So you are going to get that form. Make sure you always get this form from these guys, right? Now, let's go to the last part of the form. The last part of Schedule B is part 3. So it's called foreign accounts and trust. Foreign accounts and trust. Now, this is a little bit complicated, right? So you have to complete part 3 of Schedule B if you had over $1,500 of taxable interest or dividends, right? Or if you have, so these are the 3 circumstances under which you must complete part 3 of Schedule B. If you had more than 1,500, right, of taxable interest or ordinary dividends. Now, if you had a foreign account, now it becomes a little bit tricky there. I'm going to explain certain things to you guys. If you had a foreign account, then you have to complete part 3 of Schedule B, right? Now, the third group of people who need to complete part 3 are those who received a distribution from, or were a grantor of, or a transferor to a foreign trust, right? It means that what if you had a foreign trust, now again, these are advanced tax strategies. A lot of these wealthy guys use foreign trusts and all those foreign accounts for tax evasion, but we can delve a little bit, we can talk about it a little bit now. So basically, if you have a foreign account, you have to complete part 3 of this application, of part 3 of Schedule B, right? Now, if you had, now you have to be careful. The tax law says that what? If you had over $10,000 within any time of the year, then you need to fill a report called the F-bar, right? The F-bar is called the F-bar. So you are required to fill, it's called FinCEN Form 113, which is basically reporting of foreign bank and financial accounts, right? To report any financial interest or signature authority, right, that you have in a foreign account. So for those who high money, right? So if you were like born in a foreign country and you moved to the US, right, and if you have over $10,000 in your foreign accounts at any point in time during the year, then you need to complete the F-bar report. Most people do not know this thing. Unfortunately, most people do not know this thing. If you don't do that, you can be penalized. You can be penalized, right? So you have to be very careful. Now, I'm going to talk a little bit about foreign accounts and trusts and all those things. I don't know whether I should talk about this, but let's see, right? Now, you see, I've been an accountant for 18 years, and I came to realize something. I'm going to tell you guys what I realized. The government only knows what you tell them, right? The government only knows what you tell the government. If you don't tell the government something, they ain't going to know, right? So which means that what? If you, again, I'm not saying you shouldn't do this, you have to obey the law, right? The law says that if you have a foreign account, then you have to report the foreign account, right? But unfortunately, the government does not have enough resources to be tracking every single individual to identify whether they have a foreign account or not, unfortunately, right? So I don't think I should be talking about these things, right? So right. So I'm just going to share a little tax strategy, right? That some people do. Now, if you look at the wealthy guys, this is crazy. Should I talk about this? So it's okay. Let me just talk about this. If you look at some of the wealthy guys, this is what they do. So they basically open offshore accounts and they never declare those. They open offshore accounts, offshore trusts, and all those things, and they never declare those. Because if you look at communication with certain countries, there are a lot of restrictions, right? Have you ever wondered why? Okay, let me give you that. let me share this one with you guys. Have you ever wondered why a lot of the dictators in the world who have embezzled millions of dollars from their citizens, why they have accounts in countries like the Swiss bank, right? It's crazy because there are these banks and these countries have specific rules to shelter these people, these embezzlers, unfortunately, right? So some of the tax strategies that wealthy people use is to get these offshore accounts in some of these countries with all these restrictions. You have so many countries. You have some of them in. I've just forgotten. I've forgotten some of the names, but you have so many. You have the Isles of Man. You have some of them in Asia. I've just forgotten the names. Yes, some people go to Dubai actually, right, because of the difference in taxation, lower tax rates. So there are advanced strategies that you can use to shift your income from one country to the other. But again, most people will not do this because, to be honest, these are strategies that we use for people who are probably making over $10 million, over $50 million. These are the people who use all these kind of advanced tax strategies, right? But again, most people do not fall in that category, right? These are the 1 percentile, right? So to summarize today's conversation, we've looked at what is Schedule B. So this is a quick summary for those who are just joining now. Schedule B is a form that you must complete if you received interest, right? Or if you received dividends, right? Or if you have a foreign account. Now, I'm going to emphasize again, interest will be mostly interest from your bank. There are other interest things which I'm not going to talk about because it's a little bit complex for the time we have, right? So you have if you receive interest from a company, from a brokerage, from your bank, for example, they'll give you from 1099 INT, right? Now, part 2 of Schedule B is about dividends. Again, we've looked at what are dividends, right? Generally, dividends are given to members or shareholders of a corporation, right? If you own stock in a company, whether it's your family corporation, right, then you are entitled to dividends. But again, there are issues with dividends in C corporations. You have issues with double taxation, but there are strategies to take care of those, right? But those are advanced tax strategies. So we're not talking about advanced tax strategies today, right? Now, the last part is foreign accounts and trust. Now, I need to kind of, for the benefit of those and just to maintain clarity, if you have a foreign account because you've lived out of the country, right, then if at any point in time you had a balance of over $10,000 in that account, then you need to report that to the IRS, right, by completing Form F-bar. So you can just go to Google and type in F-bar. You have to complete that form, right? So beautiful. This was a quick overview of what Schedule B is and those who need to complete it. New Nurse Academy, yes, so you are just joining. Yes, we've been talking about taxes. So everyone who is joining on Sundays, we are going on a tax journey, right? For those who don't know me, my name is Jerry Pani, right? I've been an accountant for 18 years, right? I have a master's in accounting and finance. I have an MBA. I'm also a fellow chartered certified accountant, which is like the highest level of accounting. I've achieved, I've attained the pinnacle of my career, right? So, and then I have multiple businesses. But again, my specialty is now tax strategies. tax strategy, so which is tax planning. So we're going to talk about that in a separate session. But for those who are joining, last week we spoke about schedule A, which is itemized deductions, right? And then today we're talking about schedule B, which is interest and dividends, including those who have foreign accounts, right? So next week is going to be explosive. You have to invite your friends, right? As a matter of fact, if I don't have 100 people, I may not hold that session, right? So next week we're going to talk about schedule C. Everybody who is a business owner needs to attend next week. I'm going to be on vacation. I just came back from a business trip. I'm always traveling, so I'll be on vacation, but I'll endeavor to have a session to talk about schedule C. So if you have an S, if you have a C, if you are a sole proprietor, right, or if you have an LLC, you must attend next week's session. It's going to be crazy. We're going to talk about so many things, right? We're going to talk about so many things that will transform your business. So you have to invite your friends. As a matter of fact, if I don't have 100 people, I may have to cancel it, right? So that's what we're going to cover next week. So I'm going to give the opportunity for those who have questions, right? If you have any questions, please just ask them now. We can look at the things. I say, Linda, welcome, right? Yes. So if you have any questions regarding what we've covered in the past, right? Schedule A, itemized deductions, or if you have any question regarding what we've covered today, which is Schedule B, interest and ordinary dividends, then you can just ask the questions. But like I said, for those who are just joining now, next session, next week, so I have lives every Sunday at 7 o'clock Central Time, because I'm taking you guys on a tax journey unlike anything you've ever experienced. That will transform your life forever, right? So time for questions. Let's see, time for questions. Anybody has a question? Anybody has a question, right? Let's see. Anybody has a question, right? I don't know whether it looks like Mika wanted to be in this live video, right? Mika, do you want to be in this live video? Right? So Mika, do you want to be in the live video? It looks like I got a request. Right? So do you have a question? Right? Has anyone got a question, please, that they want me to answer? Any question for me? Right? Any question, any tax question? Right? Let's see here. Let me see if I can. Let's have a look. Who is here? Right? Oh, Mika says she's sorry. That's fine. So anybody has a question on the things that we've already covered in the past or what we've covered today? Anybody has a question? A question on Schedule A, Schedule B. Next, we are going to talk about Schedule C, which is probably going to be the most exciting thing I've done since I started, right? So it's going to be episode 5 of tax. Let's talk about taxes series. Anybody has a question? I don't see any questions, right? I can't see any questions. Let me have a look here. So in the absence of any questions, right, I'm going to end the live here. Again, like I said before I started, I did mention that don't worry about tomorrow. Don't worry about the things that you cannot control, but worry about what you are doing now. Even from a taxation perspective, if you are a business owner, you need to ask yourself the question, what am I doing differently to pay less taxes, right? If you are not doing anything different, then Uncle Sam will gladly take your money. Uncle Sam does not care, right? Look, I always tell people paying taxes is a choice. Paying taxes is a choice, right? We are going to talk about tax strategies for wealthy people and all this kind of stuff, but it's not in today's session, right? So again, for those who don't know me, I'm Jerry Pani. I've been an accountant for 18 years. I'm a tax strategist, right? My goal is to get people to the 0% tax bracket, show you how you can use advanced tax strategies and position yourself strategically like wealthy people to pay less taxes, right? Again, these are not tax strategies for insurance agents and all this kind of stuff. No, these are tax strategies that wealthy people use to reduce that tax bracket If you look at the top 10 wealthy people, they are in the 3% club. So these are the guys that position themselves to pay no more than 3% in taxes. But we're going to talk about that in a separate session, right? So I'm going to stop here, guys, right? I wish you guys a great week, a great week. And look, if you are about to start a business, or if you have started a business, don't give up, right? Look, the sky is your limit. Don't give up. Don't give up. If you welcome Winter Boy, if you have started a business, or if you are about to start a business, or if you want to start a business, don't give up. Let nothing stop you. Do something, start something. And I'm going to say this for the last time, well, for today, right? W2 tax code is the worst tax code. W2 tax code is the worst tax code. Don't find yourself in. I used to be there, right? I used to be there. W2 tax code is the worst tax code. Do something about it. Start a business. Start a side hustle. Do something, right? So, guys, I'm going to stop here. I don't have any questions. Nobody's asking any questions. So I wish you guys a blessed week. I wish you guys, start tomorrow on a good footing, right? And like I said, don't worry about tomorrow. Worry about what you are doing now and today to have a different tomorrow, right? Okay, guys. So I'm going to stop the live on for those watching on Facebook, on YouTube, right?